American University in Bulgaria.
Thank you for joining us tonight at our event. So if you have no idea about Bitcoin, then you're at the right place. And if you have any questions about it, then it's a perfect occasion to ask them. And I hope that our honorable guest, Blagovest Belev, CEO at Tavex, Bulgaria, will provide answers for you. Please give him a round of applause.
Thank you very much. I'm very honored to be with you tonight. This presentation will be recorded by AUBGTalks, and you can actually check it after the presentation on their website. So, I'm glad to see so many people here interested in Bitcoin. Usually that's a topic which involves a lot of attention, and a lot of people actually want to learn more about it. And once they learn, they become very passionate and very enthusiastic. I would like to introduce myself a little bit. My name is Blagovest Belev. I graduated AUBG a couple of years ago in 2009. Right now, I'm one of the two managers of a company called Tavex. We're dealing with investment gold and currency exchange. Basically, we're the biggest gold dealer in Bulgaria right now. I'm here to talk about Bitcoin, not so much about gold. But it's very interesting that people who are interested in Bitcoin, they rarely understand the financial system, and they rarely understand gold. And all these things are very much related to each other. Bitcoin it's an attempt to create the perfect money. And gold has been the perfect money since civilization exists. So let's start from before that. A lot of people dealing with Bitcoin are technical guys who would think about it as a get-rich-quickly scheme. And they don't believe in the future of this technology. But actually, it's going, according to me, it's going to change a lot of things, a lot of things in the daily life of people, a lot of things about how government run, how they collect their taxes, how they interact with people, and how they can spend money to go to a lot of useless things like wars and general social welfare. But anyway, before we get there, my recommendation to everybody who would like to understand Bitcoin is to understand money in general. And I guess a lot of you here are involved in economics or business in any way. That used to be one of the majors here. If not, it's still very good. It's not a complicated issue. If you're interested in it, it's not going to be very difficult to understand it. And my whole point is, just one second, it's not really updating the slides. Good. Should I continue from here? Okay, it's working now. So, our lives are getting progressively more complex with time. And we do a lot of things which we don't understand on a daily basis. We don't understand how cars work, we don't understand how the internet works, how all the complicated websites work. We don't understand our food and how the ingredients affect our body. We don't understand the drugs that we take regularly and how they affect us in the long term. So everything's so complex, and we don't have so much time. So basically, we do what is socially accepted to be done. We drink coffee because everybody drinks coffee. We don't drink gasoline because nobody does it, and we know it's not to be drunk, basically. But the thing about money is, everybody wants to have more money. Everybody understands the value of it, but actually very few people get to understand it very well, the functions and how the money system works. So this is my recommendation for everybody who is interested in this subject. Get as deeply as possible. At the end, I will recommend 3 books which are really essential, and once you read them, you actually know more about money and financial system and how it works than 99% of the people on Wall Street or politicians in general. And that's probably 99.9% of all the people in the world. So everybody wants more money, and in order to get it, first understand it, and second, be willing to do things differently in a way that others don't do it. For example, the herd mentality of people when it comes to investing is basically the wrong idea. It's the wrong way to go. One of the golden rules of investment is be fearful when others are greedy, and be greedy when others are fearful. Meaning that if everybody's buying something, probably the price is high. And when you get in an asset where the price is high, there is not much room left for it to go higher. And when everybody's passive and is selling something or ignoring something, then the price is most likely lower, which is a good entry level. But anyway, you gotta, even in business, you gotta do things like others are not doing them to be successful. Because money is it's a zero-sum game. There will never be enough for everybody. And if we print more, it's just going to devaluate the prices around the world. It doesn't mean that everybody will have enough. There will never be enough money. And for somebody to take it, to have more, they must take it from somebody else, basically. So money printing will go to inflation instead of abundance. These are the basic functions of money. You probably have taken basic macro courses and you know them. It's very interesting to learn more about the history of money though, because we know that the money that we use, let's say the US dollar or the Bulgarian leva, they all somehow fulfill these functions. But before they appeared, as they are right now, there were certain commodities in the world that served as money. And these commodities had to have some properties in order to be good money. And with the evolution, only gold and silver somehow made their way through the system and maintained a good status of money for a long time. Actually, since civilization exists, gold and silver have been money. They have been used as a medium of exchange, as a store of value, as a unit of account. So it's very important for this commodity that we're using that it's highly durable, that it's going to last for a long time. For example, meat, we cannot use meat as a medium of exchange. It lasts for a couple of days. Gold, however, can last without changing any property for thousands of years. It's not going to move. It's not going to change at all. It's going to be the same object. Money has to be portable. Portable means that high value is concentrated in a small volume, so that you can easily transfer this money from one place to another. Let's say, for example, if your phone in the pocket was made from gold, it would have costed like $40,000 right now. So it's pretty valuable. You can go and buy an apartment here in the city with something which is that big. If you want to pay with wheat, for example, or sand, you got to go with a few, I don't know, trucks or whatever. It's not possible. So money's got to be divisible. You have to be able to easily divide on as many small pieces as possible. It's got to be fungible. This is very important. It means that no, let's say 1 gram of gold is as good as the other. We cannot use real estate as money because each piece of property is different. They're not fungible. Each piece of land is different even from the next one. Each apartment is different. We cannot use diamonds as money because diamonds have different characteristics. They're not equal, they're not the same. Final property that we would like to discuss is scarcity. Money must be scarce. When a commodity starts being used as money, its price its value rises. And if we're using wheat for money, we would produce a lot more wheat, and people will consume a lot less, so the price will even go higher, and eventually the supply will go much higher, and that will lead to fluctuations. With gold, it's very interesting. All the gold that has been ever mined in history of the world is about 180,000 tons right now. And as of today, with all the technology that we have in the world, we're producing about 1% annually in addition to this gold. So it's so scarce and so difficult to extract from the earth that we're only able to extract about 2,000 tons per year, which is expanding the supply of gold in the minimal possible way. So, with the evolution of money, the first banknotes appeared. They are contracts for somebody holding their gold in a storage somewhere. These contracts could be easily exchanged and were much easier to transfer and to carry with you than the gold coins, for example. That's why people prefer to store their gold somewhere and then just exchange with the paper. However, the people who store the gold quickly realized that actually owners of gold don't often go with the paper to redeem and take their gold. They actually kept it there for longer periods of time. And the so-called bankers at this time were able to issue more notes than there was gold in the vault. So in this way, they created somehow a fractional reserve. They were not able to fulfill their promises to their clients at any time, because if everybody was able to go and take the gold from their vaults, it was not there. This is how the current banking system is actually working. We think that we have our money in the banks, but it's not there. If everybody goes to take it, it's not there. The bank is going to need financial aid from the central bank. That's why we need a central bank to help support the banks which are short of money. And the banks are so leveraged that in Europe, for example, if 3% of the depositors come today and want to take their money, the money is not going to be there and the bank is going to go bankrupt if it's not saved by the central bank. So the whole banking system is like a house of cards, which is based on trust. So the system that we use today is based on pretty much trust. But only 43 years ago, it was still based on gold. We were operating under a gold standard. What does this mean? There was a fixed price between gold and US dollars, and that was maintained by the Federal Reserve and the US government. So that if somebody owns dollars, they can easily go and convert them into gold and take the physical gold. This way, the whole currency was pegged to the gold. It's like the Bulgarian level right now, it's pegged to the euro. The national bank holds as much reserves in euro so that they can cover all the level which is printed. And that's a very significant thing. It helps, it actually restricts the government from printing money. In order to print new money, you got to bring more gold. How do you bring more gold? You either dig it from the ground, which is very expensive and difficult, or you just produce more goods and trade them for gold from outside, and then you print more money on the base of that. So it's used as a restriction so that governments cannot spend their way, they cannot spend recklessly on things that people don't approve of. They cannot have huge deficits. They cannot print and devaluate money like they do right now. The system was also made in such a way that other governments and countries were able to hold dollars as reserves, and based on these dollars, they were printing out their currency. Let's say France was accumulating not only gold, but also dollars in their financial reserves, and based on that, they were printing French francs. So what happened in the 1960s? Because of the Cold War and other expenses, the American government started printing too many dollars. The money supply increased, but the gold that was backing the dollar didn't increase. And that was obvious to some people. The French president Charles de Gaulle actually was the first one who wanted to convert a big portion of France's dollars into gold and take their gold back. And that system survived only a few years after that. At some point, everybody, every head of parliament, every country knew that the US cannot sustain the gold standard anymore, and they defaulted on it in 1971. Since then, we are operating in a system which is completely based on nothing, and new money can be printed in the matter of seconds with just a few strokes of a computer, let's say. So after the relationship of gold and dollars was broken, just for a short 10 years, the price of gold rose from $35 to $850. This is the system that we're operating right now. You see on the graph, that's the global monetary supply since 1971. And the money supply have risen more than 10 times for this period. That means a devaluation of the money of more than 90% for 40 years. That's due to banking expansion and due to money printing. So in this environment of constant money expansion, every unit of currency is devaluated. This doesn't encourage savings, it encourages spending. Whatever you get, you're much better off spending it right now for some certain good, real estate, shares or whatever, than saving it as a currency, as money, to spend it 40 years later when you retire, let's say, because it's not going to be worth as much. It's going to be worth 10 times less. So how do we expect people to save when we have this kind of environment? This stimulates spending. And right now, the current crisis that we're living in, it's because of too much debt. It's because of too much spending and because of too little savings. It was an obvious example. Probably some of you know that a few years ago, 15 years ago, let's say, we had a hyperinflation here in Bulgaria. And this is normal when you have a currency which is not backed by any commodity, and it's only up to the government to decide how much to print and what is going to exist. Then when this government is in trouble, which very often happens, especially in emerging markets, they tend to print their way out of the trouble. They tend to stimulate, let's say, they're out of the recession, of the crisis, of the debt. And that's what's happening now, but it's happening on a global scale with the American government, with the European governments, with Japan, and that's pretty much the whole developed world. We have an unsustainable debt bubble which is constantly increasing and feeding on itself, and by the law of mathematics, it cannot continue forever. It's going to end at some point. And when it ends, if we don't have a new system to go to, it's going to be ugly. It means that people will be dying on the street. There will be protests, and the protests in Ukraine right now are nothing compared to what it could be if the money system collapses. And we are in a dire need of something new happening so that we can move to it. We must move to another better system which can be sustainable in the long run. Right now, Fed, ECB, all the central banks can print money easily every day, and that's what they do basically. You see the devaluation in the graphs. So the few main problems in the current system. This is part of the introduction. I would like to show you why we need Bitcoin in general and what is the current problem right now. So as I see it, one of the biggest problems is the fractional reserve banking. A lot of, probably you all know about it. This is how the banks are required to keep only a small reserve in their accounts, and they are able to lend everything else. The banking system can multiply the basic money supply that comes from the central bank. They can multiply it, let's say, 10 times by credit expansion. So they are actually able to print money, and they're allowed by law to print money. If me and you are running a printing press in our basement, we're going to be thrown in jail. But actually the banks are official institutions who can print money. The other big problem is interest rates control. Interest rate is the price of money. If I would like to borrow money for a year, I'm going to have to pay a price for that. And that price is the interest rate. This is something which is artificially set by the central banks again. A group of people gather and they decide what the interest rate is going to be. And that's not how the free market operates. That's not how prosperity is done. It's not how prosperity is happening. I'm sure that most of you are aware that if something is set by certain people, it's not going to work. There's got to be a market way of deciding what the price of money is going to be. Instead, every government wants to control this. So these two problems are causing artificial expansion and contraction of the money supply. This leads to artificial booms and crises. The last boom that we had was a few years ago, the real estate boom. The real estate boom happened because of credit expansion, and it ended in a very ugly way. Almost the whole financial system collapsed with it. You can even see, if you walk around in Blagovest, you will see a lot of buildings which are they're not being finished. If you go to Sofia, you'll see even more buildings which will probably never be finished. And that's because of the very quick expansion of the money supply. A lot of people believe that that's going to continue. A lot of people borrowed money to buy real estate, and that's a self-feeding bubble. And the price of real estate goes up, 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 which stimulates entrepreneurs to go in and start building. And eventually, it's not sustainable, and it's going to collapse. And that's what happened. Now we're stuck with a lot of rubbish, basically. So that's a graph of the value of the purchasing power of the US dollar for the past almost 100 years. And actually the Federal Reserve was created in 1913, and that graph starts from 1913. So for about 100 years, the purchasing power of the US dollar has decreased 98%. So they managed to introduce stability in our lives. 100 years, 98% down. So it seems like the system is in a really big trouble. And I've always wondered, how is it possible that we're living in this system? A lot of people understand it. Now with the internet, all this information is freely available. A lot of people know it. How is it possible that it's still going on? It bugged me for a long time. Then I figured we got to be able to move to something which is better than the old system, and only then we can actually make the transition. And the gold standard that we've had for so many years, like hundreds and thousands of years, is not able to come back because governments don't want it. They're doing everything they can in order to get rid of it. As an example, there was a few companies like eGold and Gold Money, which started something like a private gold standard. You as a user could buy gold from their company and then transfer the ownership of this gold to another party. Let's say you pay to the other party with this gold, and it's still staying in their vault. So it's like a private currency backed with gold. You could easily transfer it between the users. However, e-gold was banned, and the people who created it are sued for money laundering. And the people from Gold Money actually discontinued this operation. So it's obvious that we are not going to be able to bring back the gold standard. And I recently saw this quote from Richard Buckminster Fuller, and it struck me only then that we actually need to have a better system that will make the old system obsolete, and only then the old system will go away, it will disappear, and we're going to transition to the new one. So it seems to me that this new system is the Bitcoin, or at least a cryptocurrency that is going to appear if Bitcoin is broken in some way. But gold is going to continue to have its function as the greatest store of value. It's the money of nature, but Bitcoin is a better medium of exchange. And it's a technology, it's going to evolve, it's going to change according to the needs of people, and it's going to be it already is so much better and more efficient than all the systems that we're working, that at some point everybody will be using it on a daily basis. Let's try to figure out how is the system working. So it's an attempt to make the perfect money. And what is the perfect money? It's got to be digital, let's say. It's obvious. We're living in the 21st century. Everything digital is moved quickly, easily, and efficiently. It's got to be not inflationary. It has to be with a predictable supply, so that we know how much a unit of this new currency or new money will be worth 10 years from now, 20 years from now, or even 100 years from now. So there's got to be no limits. Last year, at this time, there was a huge crisis in Cyprus. You probably remember the news. If you had money in their banking system, your money was stuck there, and you couldn't move it because the government said so. Are you going to be happy if that's happening with you? You're not going to be. But what can you do? You're in the system which is controlled by other people. And if they screw up, your money is there and will suffer. So we need a system which has no limit of access. So if I have money in it, nobody can actually say you're not going to spend it. But I'm not going to need any permission to use it. So this is an attempt to make such kind of system. It's fast and cheap. A transaction costs right now 6 cents, or it might be done for free if you know and you're using the right software. You can, for example, transfer $1 billion on a Sunday afternoon from Bulgaria to Australia, and that's going to cost you 6 cents. Is there any other system that can do that? I don't know any. And it's going to be relatively fast. The other party will see the money right away, and they will need to wait for 6 confirmations or 1 hour in order to be 100% sure that they actually got the money. How is this system working? So Bitcoin it's a software which is a payment system and currency units inside. It's a little bit confusing because both of these things are called Bitcoin. So we got to make sure which one we're talking about. Is it the payment system or is it the units inside? Of course, they go hand in hand because payment system without currency units inside is worthless and the other way around. So it's shared online since 2009. The creator is anonymous. Group of people or one person, nobody knows, under the pseudonym Satoshi Nakamoto. But that doesn't matter really, because once he put it out there, he has no control over the system. So whoever created it, it doesn't matter. It's open source. People who can read the code can confirm everything. They can see what the software is doing, what the protocol is supposed to do. It doesn't matter that a lot of people are somehow bothered by the fact that the creator is anonymous and the intention behind it are not known. But in the long term, that doesn't Users, that's one of the very important things. Every user who downloads the client can create as many bank accounts, let's say, as possible, as he wants. And these accounts are not directly linked to his name. So that's how we can preserve our anonymity. So we go to any computer, download the client, create as many accounts as we want. Each of these accounts you can give to other parties and they can transfer Bitcoin to them. This is a snapshot of the main Bitcoin client, one of the mostly used ones. It's pretty simple, you see. There is an overview of what's going on. You can send coins, you can receive coins, and there is a list of transactions. It's pretty simple to use. How is the system working? You know, everything digital is easy to copy. And we know that from experience. We're sharing MP3 files and movies and whatnot. What is preventing a Bitcoin to be copied 100 times and spent 100 times, thus cheating on the system? The interesting thing is every person who downloads this software, they're also downloading the general ledger of all the transactions within the system since day one. So if I would like to spend a Bitcoin that I have, I'm connecting to the other nodes, the other users in the system. I'm sending this information, and they're checking the history. Was there a time in history that I received this Bitcoin? And if there was such time, they approve my transaction. If they cannot confirm that I got it from somewhere before, then they're rejecting the transaction. It cannot happen. This is the clever way to actually make sure that everybody who is spending the Bitcoin, they actually got it before. So each of these softwares, let's say we download it on this computer, it's going to be connected to other nodes in the network. Let's say it's connected to 8 other nodes. Normally, these other nodes will be connected to, every one of them will be connected to 8 other users. And thus, if we send information to the network, it's going to be spread out among the users pretty quickly on a peer-to-peer basis, like the torrents. So that's how pretty much the basic system works. There is another problem though. If I have this Bitcoin and everybody agrees that I have it, I could still cheat the system trying to double spend it. Or I can spend it to person A and person B at the same time and sending these transactions to the nodes that I have been connected to. And the result will be so that half of the nodes in the network will know that I spend it to person A, and the other half will think that I spend it to person B. Now, there's not going to be a consensus between the network where this Bitcoin went and who can now spend it. So this is the real innovation actually behind the Bitcoin, how to solve this problem without a third party to which I'm sending this information. So the Bitcoin network is a spread. All the information is spread among all the users. There is no central location, there is no servers, but now somebody needs to control the fact that I cannot spend one Bitcoin twice. And this comes, the innovation comes from the blockchain, the so-called blockchain. What the creator did is this general ledger of all the transactions is divided into blocks with time history. Basically, it's block after block after block after block with time. Every 10 minutes, a new block appears, and it's attached to the old one. So it's a chain of blocks. The first, when the system started operating, there was the so-called Genesis block, the first one. It didn't contain any transactions because there was no transactions before that. There was no Bitcoin existing. This block created 50 Bitcoins for the computer which published it. Then, from then on, every 10 minutes a new block is created. The person who creates the block gets a reward of 50 Bitcoin, and they include all the transactions that they received as a user, they put them in this block. This is how the reward actually stimulates the person who is, the computer who is publishing the block to be honest, to be actually putting all the real transactions that he got from the network into the next block. Who are those people who are publishing the blocks? These are the so-called miners. Here comes the role of Bitcoin mining. The miners are people who set up a computer in order to and try to solve one problem which the system brings. The system makes a hashing problem that every computer tries to solve. And the first one who actually succeeds is the one who has the honor to publish the next block. And these blocks will contain all the transactions that he got as a user. And as a reward, he gets 50 Bitcoin. Pretty simple. And in order for his reward to be worth something, he needs to continue to allow the system to work in a way. So if he wants to cheat and not include any transactions or somehow disrupt the system, the reward that he gets is not going to be worth anything, because the Bitcoins are not going to be worth anything, because nobody would trust them. And this way, it's a good enough stimulus for those who are able to solve these problems to be honest and include all the transactions. So with time, in the beginning, it was very easy to mine. You could use a regular computer and be able to mine some Bitcoin. Right now, there are so many people trying to do it, so much computing power being involved in the network, that it's by far the most powerful computer network in the world. And it's estimated that nobody actually, not even the US government, the FBI, CIA, NSA, whatever institution they have, they cannot provide more power, more computing power than the network right now. And the network is spread among the random people in the whole world. So if they want to stop the mining, they're going to have to go against the regular people. That's like war and terror. You have no one enemy. Everybody might be your enemy. So it's a lost battle since the beginning. And that's the interesting thing. It seems like nobody can stop it because it's spread everywhere. And you see, the system, one very important thing, the system changes the problem with the amount of computing power which is in the network. So the more the computing power there is, the more complicated the problem becomes. So that eventually it takes only 10 minutes for it to be solved and for the new block to appear. So if I'm making a transaction now to person A to person B, only one of them will get to be published in the block. And then the network will know that this transaction happened and the other didn't. And the person who received the Bitcoin can eventually spend it because there will be a consensus that he got it. And this way, nobody's going to be able to cheat other users sending them fake Bitcoins. Okay, how is that helping with the supply? So in the beginning, there was nobody had any Bitcoin. The first block, the reward was 50. And for every other block from then on, it was 50 Bitcoins reward. That was the primal, the initial way to get them. After some time went by, and a lot of people accumulated, the first exchange appeared, and people were able to actually buy them with real money. You could make an account, put some real money inside, and buy the Bitcoins. So a price of these units appeared in 2010. Before we go to the next slide, it's this reward, which is 50 Bitcoin for every block, gets halved in every 4 years. So right now, the reward is 25. In year 2017, if I'm not mistaken, the reward will become 12.5. And that seems like not much, but even with today's price and 25 Bitcoin reward per block, that's $15,000 reward for people who solve this block. And that's given every 10 minutes. So that's like $2.16 million per day. That's a lot of money. And this money stimulates people to buy computers. They buy hashing power machines and try to solve more problems. And it becomes increasingly more difficult for anybody, for one party, to be able to get over the network. Because in order for them to disrupt the network in a way, they need to provide at least 50% of this computing power. And it's increasing exponentially. A few months ago, it was, let's say, okay, I'm not going to say these numbers because I don't know them by heart, but it's increasing with an unbelievable potential. A little bit about this address and how these bank accounts are being created. As I said, there is no central server, so how do you prove that you own one of these accounts? How do you prove that you're actually the owner and somebody can spend the money instead of you? It's using this one-way cryptographic function, SHA-256. And it's a very interesting thing. You can create pairs of numbers. And these numbers are like this, with numbers and letters, and they're very long. So you don't need to remember them. But how they're used. The shorter one, the red one, it's your account. You need to give it to anybody that you would like to send you money. In order for them to send you money, they just type it in or copy-paste it in their client, and they write how many Bitcoin they would like to send. Now, the whole network knows that this red number just received 1 Bitcoin, let's say. And that's a consensus among all the users. Now, only the owner of the green private key can actually spend this money. So in order to spend it, you send a message to the system with the green code, and the system can actually prove that the green code, when they hash it with this function, it equals the red one. But it's only one way. They can hash the green one and get the red one, the short one. But if somebody knows the red one, they cannot go back and find your key. So that's the cryptographic trick here. It's only one way. So you give this red number, it's public, you can give it to anybody, and they cannot get your private key from it. It's protected, only you know it. But the thing is, if you lose it, you lose your money that is attached to the account. Basically, you need to be very careful how you protect these keys. But if you know how to do it, and it's getting increasingly easier and more user-friendly, you can put it in a flash drive, you can print it on a paper, and then take it with you and have access in your money from everywhere in the world. You can fly to Australia, you can fly to Argentina, and not carry any money with you, just a piece of paper with this green code, and you can spend it from there. And that gives you a lot of freedom, and it makes your life easier. It also makes Bitcoin very difficult for confiscation. If somebody wants to take your Bitcoin, they need to get your private key, and they cannot easily get it without your consent. So about the price and the trading of Bitcoin. First exchange, Mt. Gox, appeared in 2010, and then the price was less than a cent. In 2011 already, the price reached $32. It reached this level after the news of a new website working in the Tor network, which is anonymous and was like eBay for drugs and illicit goods. You could buy guns, you could buy drugs with Bitcoin in this network. So this was like the first serious use of the new money. And it worked. It worked until last year when they supposedly caught the guy who created the website, and it's gone. But it was the first use, first application, and it worked beautifully. So the price was $32 at the time, which is a huge record. It's a huge increase for 1.5 years. Last in 2013, you probably heard of the huge rise of the price. It went from $13 in January 1st, 2013, and it reached over $1,200 in December last year. So that's probably the best performing asset in the whole world for this time. About regulation, right now, this is the big issue in the whole world. What is this? Is it a currency? Is it a financial instrument? Is it a commodity? Is it something new? It doesn't fit in the paradigm that we have right now. It doesn't fit in the law well. So it's a huge issue about regulation. What they do in Germany and England, it's treated as a financial instrument. There is no VAT. There are capital gains taxes. You're paying on the appreciation of the units. In Sweden, Finland, Norway, in the Scandinavian countries, they decided that they're going to put VAT on it. That hinders trade. It's a huge problem because companies that would like to sell Bitcoin need to add VAT, and that's it makes it unnecessarily expensive. The US has a quite friendly environment. They haven't made a lot of regulation yet. It's not to be banned, at least for now. They seem to want to encourage businesses and entrepreneurs to go into the sphere. China seems very hostile. They banned a lot of the businesses accepting it. So there's no business in China who is accepting Bitcoin as a payment right now. But a lot of people actually own and buy Bitcoin in China. A lot of people are interested in Bitcoin in China. It's the biggest market. It's the biggest daily volume right now comes from China. Cyprus, for example, is a huge surprise. You remember last year Cyprus had this crisis, banking crisis, and it lost its reputation. And it's not a huge economy. They relied on their banking system. They're living on it. Tourism is the other industry that's well developed there, but it's still, we're living in a financial crisis, so it's not going so well. And right now, they're in such trouble that they're actually considering adopting Bitcoin and stimulating new businesses and entrepreneurs to start developing services so that they can regain their competitive advantage. And eventually that might turn out to be a very good strategy, because if we cannot stop this system, then the people who adopt it first will be the most benefited ones. They will benefit the most. Bulgaria, you will not be surprised to learn that there is nothing yet going on. There is no regulation. There is not even the slightest idea of what is going to be here. So if you would like to do any business, it's not so easy. So I prepared some frequently asked questions and would like to answer them. These are the basic things that I hear from people which are the most interesting. For example, how is the price of Bitcoin units determined? How is the price of anything determined? We take the price that the last deal happened. Let's say in an exchange, the last deal was somebody bought 100 Bitcoins for $600, and we take that as a given. So the last exchange that happened, we take that as a price. But how is it determined? It's a new financial instrument. How do you value it? It's very interesting. Right now, all the Bitcoins that exist, which is about 12.5 million, times the price, equals about $7 billion market cap. And $7 billion market cap is nothing in the financial world. It's something very small. As a comparison, WhatsApp, you probably know, was sold a few weeks ago for $19 billion. The US debt, the debt of the US government is 17 trillion. This is 17,000 billion. So the size of something which is 7.5 it's extremely small. It's tiny. For example, the gold market, the market cap of gold is about 7 trillion. That's 7,000 billion. It's again 1,000 times bigger than Bitcoin. So the price of each individual Bitcoin depends on how much the system is spread out and how much it's being used. It depends on the adoption. So the more systems it replaces, the bigger the adoption, the more demand for it, and the higher the price. So right now the ecosystem is being developed very quickly, and investors and all the participants in the market value one Bitcoin at about $600. Is it fair price? We don't know. Is it a good investment? Probably yes. Is it risky? Absolutely. You could lose everything if it could easily go down to zero if the protocol is broken. Is Bitcoin a bubble? Bubble seems to be a very highly used word in the recent times. Everything that gains value quickly seems to be a bubble. And the media loves this word. Gold was a bubble, stock market is a bubble, real estate's a bubble. Bitcoin, every sudden rise of Bitcoin is called a bubble. But by definition, a bubble is that the price of an asset is so much higher than the fundamental value that eventually it must come down. So is Bitcoin the bubble? I personally don't think so. But what is the fundamental price? This is also very subjective. If Bitcoin replaces, let's say, the US dollar as a world reserve currency, one Bitcoin could be well worth over $1 million. So is that the fundamental value of it? Right now, no, but in the future it might be. So is Bitcoin a bubble? That's up to you to decide. What if they ban it? Can they ban it? It's a peer-to-peer technology. People who use it are everywhere. People who support the system with the computational power, they're everywhere. If they ban it, they're going to slow down the development. It's not going to go as quickly as we want, but actually, they're not going to stop it. And there will be countries like Argentina, for example, who are experiencing hyperinflation every 10 years. And they are in a dire need of a substitution of their system right now. And they're about to have the next hyperinflation. They have more than 40% annual inflation right now. And their last hyperinflation was 10 years ago. So do you think that the people in Argentina will say, okay, it's banned, we're not going to use it? No, they're just going to continue using it because their government is anyway betraying them and defaulting on their promise of keeping a stable currency. So why would they keep on supporting their government instead of transferring into a system which is way better and proves itself that it's working way better? So can they ban it? Probably they can. Probably the whole world is not going to ban it at the same time. There will be countries which use it, and those countries will prosper. So the price might still go on rising despite a possible ban from some countries. Volatility, is it a problem? The price is moving up and down very quickly, like no other assets. People who are trading stocks and bonds and commodities, they're like, oh, I wouldn't touch that. It's too volatile. I don't understand it. But is that a problem? If you're an investor who doesn't believe in the fundamental value, yes, it might be a problem. If you're a merchant who accepts it as a way of payment, it might be a problem if you hold on to it, But if you sell it right away, then you lock up your price and basically you get your margin for whatever you sold. There are other companies who are doing this service. They accept the Bitcoin for you, they convert it into US dollars and they give you the money and you don't even touch the Bitcoin, but it's just like another way of receiving money, like credit cards or checks or whatever. You just use the payment system. So in this case, volatility is not a problem. So for future adoption, volatility is not going to be a problem. How to get Bitcoins? There are three main ways how to get them. Either mine them by trying to solve these problems with your computer, or buy them with money on one of the major exchanges, or locally at whoever owns them. There is a website, localbitcoins.com, which connects people in any country that can trade with each other. Or the third way is just provide services or products for it. If you own a business or you do any kind of service, you can accept Bitcoin as a payment and thus get it. What would be the price in 10 years? Very interesting question. This is a technology. It's not an asset. And with like every technology, it has an adoption curve, S-shaped adoption curve. Right now, we are in the early stages where only the, let's say, early adopters phase. So once it is ready to go mainstream, the adoption will be vertical. A lot of people will start using it. And with that, the demand is going to rise and the price will rise accordingly. So what will the price be in 10 years? If this mainstream adoption started, the price will be way higher. If the system survives and there is no major problems, and we're building on top of it our financial system, then the price could be hundreds of thousands of dollars, maybe even more. We don't know. It depends very much on what is Bitcoin replacing. Is it replacing only the currencies of countries like Argentina and some African countries, or every country with currency problem? Or is it replacing the whole financial system? That pretty much depends. What are the main potential problems of the technology? 51% attack is quoted to be the biggest vulnerability. What does this mean? If somebody is able to gain 51% of the computing power which is trying to solve a block, they could solve more blocks and try to disrupt the system by including false transactions or not including specific transactions. And thus they will try to disrupt the system. The thing is, who will be this person or institution that will be able to spend billions of dollars and will want to destroy the system? Once they're able, if in theory they're able and they actually do it in practice to get 51% of the computing power, they're going to earn so much money. They're going to earn, as of today, more than $1 million per day, and they will have no incentive to actually disrupt the system. They will have incentive to keep the system together, to keep it working, and to actually benefit from this that they're getting. There are a few more problems, like these are technical issues, which with every update of the program, they get resolved. It's very interesting. Who makes the updates, actually? As I said before, there is no central issuer, there is no central server, there is nobody who is directly responsible. However, there are updates. There are changes. If there is a bug, somebody can fix it. Who is this somebody? There is a Bitcoin Foundation which is created to support it, to make regulation easier, and to actually make these updates. Their function is the following. They are creating an update and they're proposing it to the world. It's open source. A lot of people review it. A lot of people said their opinion on it. If there is something wrong with it, like there is inflation or there is a way to cheat the system, everybody would know and nobody would actually move and transition to the next level. So what will happen, there will be a fork in the blockchain with transactions in two different ways. And most people will stay on the old program. They will not move and transition to the new one because it's not in their interest to do it. It's also not in the interest of the Bitcoin Foundation to create a false new update. And because it's open source, everybody is able to review it. So it's again a question of stimulus. Nobody has the stimulus for the system to stop working. Everybody wants to be able to keep on using it. If there is a bad update, nobody will move, nobody will migrate to it. Okay, 1 Bitcoin costs $600. How to buy a cup of coffee with it? Every Bitcoin is divisible into 100 million parts. So the smallest part is 100 millionth of a Bitcoin, which is a very, very small number right now. So you can spend just a tiny portion of it. Why is this cryptographic function SHA-256 used? Is it secure enough? That's a question that bothers a lot of people who are so-called, they care about the conspiracy theory that maybe the US government created Bitcoin to keep on spying on people, like collecting more information about transactions and who has what and stuff like this. Or some people believe that actually the NSA, who created this SHA-256, have a backdoor and they're able to crack it. So they're pumping up this big scheme now and eventually they'll break it down. The thing is, this algorithm, this cryptographic function is used in all the online security that we have right now, including the US Army. So if it is broken, it means that there are much bigger problems in the world than Bitcoin not working. There could be a lot of potential losses and problems for all the governments, basically. So it was specifically used because it's the most widely chosen so far. Is Bitcoin anonymous? It could be it could be 100% anonymous if you know what you're doing. If you don't know and you're not careful, maybe the Bulgarian government will not know what you're doing, but maybe the NSA will know. So it could vary between complete anonymity and complete transparency, transparency is not a bad thing always. Imagine if the government is so open that you can actually follow how they're spending their money. And because every user has all the transactions, everybody at home could actually see how the government is spending their money. Or if you're donating to a charitable organization and you would also like to see how they're spending your money, you can actually audit them, and anybody could actually audit them. This system could actually change the way publicly traded companies are audited. Maybe at some point every shareholder will be able to see how the money is flowing, where it's going, who are the suppliers, what are the profit margins, what is going on. The world might become much more transparent thing if everybody is using Bitcoin and is voluntarily participating in that. How safe is my personal computer to store Bitcoin? The answer is the same like how safe is your wallet. How much cash are you feeling okay to carry with you in your wallet and risk losing it? This is how much Bitcoin you should actually keep in your computer. It's vulnerable. You shouldn't store big amounts. There are ways to protect it by creating a paper wallet. For anybody who would like to do it, it's very easy. You can learn about it online, and it's not a big deal to do it. So I definitely recommend it if you'd like to invest. Do you pay capital gains taxes on Bitcoin? In Bulgaria, it's not clear, as I said. In the United States, you pay. In Germany, you pay capital gains. So It might not be easy for the government to find out that you have Bitcoin income or that you own Bitcoin and how much you're going to pay, but it's better to do it, because if you get audited, then you got to pay with interest. Can another alternative coin be more widely used at some point or eventually? Because right now there is more than 100 other alternative coins being created. Every day a new coin is being created. Because this is a software, some people are afraid that this might be the MySpace, and tomorrow a Facebook will be created and will outperform everything else. So it is possible theoretically, but what gives security to this system is the network, the network effect that it has, and the computing power that it has. So Bitcoin, as the oldest and the foremost currency, has the biggest network. So it's the most secure. And at some point, there will not be enough computing power to support all these currencies. So they're not definitely secure. Somebody might be able to break them down, to cheat somehow the system. So the only secure one is the biggest one. Eventually, there might be a few, maybe the Bitcoin will be the most widely used. There might be a few more which are somehow supplementing it. They might have a little bit different features. They might add up to the whole system, but Bitcoin will be 80% of the value. And 3, 4, 5 other currency will represent the other 20%. So, how to benefit from the trend? There are a few things which I recommend, and I'll briefly explain them. First thing is buying the Bitcoin itself. This is a risky investment. Whoever, according to me, it's undervalued. You can easily do it, but you got to be careful, because if something goes wrong with the protocol, the value will be zero at some point. By buying it, you get an exposure in the whole Bitcoin ecosystem. So all the businesses which are created, all the merchants which are involved, the more people are involved, the higher the price at some point. So buying it is probably the easiest way. Mining is the second most used one. So if you'd like to mine, you need some technical skills. That's a big trouble for a lot of people. Another thing is, I don't recommend mining, because the first impulse of people who would like to get Bitcoin is to start mining. It's not buying, it's rather mining. I don't know why. And as the rule of investment, contrarian rule goes, you better do the things like other people are not doing. I mean, you got to do them in a different way. So buying is the better way to go than mining. You can also invest and try mining alternative coins. They are, in a way, an insurance of that something wrong might happen with Bitcoin. So if something wrong happens and the Bitcoin is compromised in a way, it's pretty sure that there will be an alternative coin right after, which will emerge and will be immune to the same problem, to the same attack. So if you are able to identify these coins from now, they could act as insurance against Bitcoin failure. One of the best possible ways to actually benefit from the trend is to create a business or something which supports the wider adoption of the system. So you could, of course, here it's a lot of technical knowledge and expertise is needed, but if you have the desire, you can do it. These are just a few examples what can be done. Wallet services, payment service providers, different ways to secure the Bitcoins of people, consulting, There is room still for Bitcoin exchanges. Any service which is helping the wider adoption will be beneficial for the creator, absolutely. And finally, accepting Bitcoin as a payment for your business or for services that you do. Here is a small experiment that you can do. Everybody who has an Android phone, you can download an app. It's an online wallet service. And once you download it from the Play Store, you just register with an SMS that you get, and they send you some free Bitcoin so that you can play with it. It's actually very useful to start playing with it to understand how it's working. So you can install this one on the phone, install another client on your computer, then make transfers between you, so that you can actually get the feel of how the system is working and what it takes to transfer money. Here is a project that I'm working in my free time, and I believe it has a lot of potential. And I'm looking for people who are willing to join me in this venture and help me produce content. I need people who could go deeper into this field, have interest in it, and are ready to get as much details as possible, so that we are able to provide specific advice to investors: what to buy, how to buy it, where to store it, how to hedge themselves, how to spread their portfolio, etc. So if you're interested in this, I will post it to the Facebook event just for reference. You have it recorded on the camera, and you can take a picture now. It's a small contest that I would like to organize. People who would like to participate can send me a CV and an essay with 1,000 words maximum about how they see the future of cryptocurrencies. Okay. Before we finish, there are a few resources that I would like to share with you. I will also post these slides to the Facebook event, or if you'd like, you can take pictures. As I said, there are 3 books that if you read them, you will know more than 99%, and you will understand economics, you understand financial system, money, and how things are run in the world better than I would say really 99% of the people involved in this field. And these books are the following: Murray Rothbard's America's Great Depression, the 3rd book listed here. It's free. You can find a PDF for free on this website. Economics in One Lesson, very tiny book, very easy to read. All of them are actually very easy to read, very understandable, very clear. And the 3rd one is Money, Bank Credit and Economic Cycles. Actually, the last one, I'm pretty sure it's available in the library down here. It's a pretty thick book, but you can read only the chapters that you're interested in, or it's pretty easy to read. You can read the whole thing it's pretty quickly. Basically, they're all from the Austrian School of Economics. This is something that is not taught in most of the textbooks. It's a slightly different view of the monetary system, and personally, it's much clearer. As far as I see, all the people who are able to predict the financial crisis and all the people who know what is going on right now are somehow supporters of this school of thought. So it's definitely worth checking it out if you feel like it's better than what you're seeing in everyday life. It's good to go deeper into it. ZeroHedge.com is one of the best websites concerning finance news and political news. It's like a blog, posting about 20-30 posts per day. I highly recommend these people that You can watch interviews and lectures from them on YouTube. There's a lot of materials, a lot of things that you can see. There are documentaries, there are a lot of interviews with them. For example, this Mike Maloney guy, he made a series of documentaries describing the money system in a very, very good way. It's called The Hidden Secrets of Money, if I'm not mistaken. I highly recommend to watch all of them if you have the time, and it's definitely worth the time. Krasimir Petrov used to be a professor here in AUBG. This is his website. He posted there a lot of lectures that he has done here. He posts regularly articles, and there are many resources that you can find on his website. I highly recommend it. A few more things which are actually in Bulgarian. I don't know if anybody of you will be interested in them. We in Tavex issue something like a golden newspaper. We distribute it in our offices in Sofia, Varna, Plovdiv, and Burgas. Every 4 months we have a new issue. There is a very good TV show here. It's concerned in politics and economics again, Boom and Bust in Bulgaria On Air TV. It's again in Bulgaria. And the last website is very good news about, again, politics and economics in Bulgarian language. Here are the Bitcoin resources. I highly recommend Andreas Antonopoulos. Videos, lectures, interviews, whatever you can find on YouTube with him. There are at least 15 very, very interesting videos that you can watch. The guy understands really well the protocol. He can read the code. He understands how it works. He understands economics, and he really transfers the message in a very good way, very understandable. There are articles by Eric Voorhees, 2 articles which are unbelievably good. Actually, these 2 articles were the ones that made me figure out how the Bitcoin is working and how that it really has value. I first learned about it a few years ago. I saw the movie, this video, which is on the bitcoin.org, a minute and a half, very basic, and I was just like, this is just kids' money, whatever, it's not going to work. It didn't seem serious. But after reading these 2 articles, I couldn't sleep for 2 days. It was an eye-opening moment. And after that, I fell into the rabbit hole. I've been digging more and more information about it every day, and it's become like a huge thing. So these Jake Cano's 2 articles are also very much recommended, and the Reddit Bitcoin forum. You can find everything on a daily basis there. So if you'd like to read any daily news or anything interesting, you can find it there. So that's from me. Thank you very much. I would like to thank Ali for organizing this event in the Libertarian Club. So I hope you enjoyed it. If you have any questions, I'll be glad to answer them now.
Thank you.
There was a question here.
About if you want to buy the Bitcoins.
Where can you buy?
Yeah, where to buy? Where to buy?
There is one website in Bulgaria, bitcoiny.com. I know the guys personally. They are selling. We in Tavex are working on starting to trade with Bitcoin as a currency, because we trade with over 40 currencies, and we're just going to add it as another one. I hope that happens by the end of this year. It depends on regulators. And the best way, actually the cheapest way, is to open an account in the biggest European exchange, which is bitstamp.net. And there, once you open an account, you transfer money, and you convert them into Bitcoin, then withdraw the Bitcoin to your computer.
Since you're working in the field of money exchange and currency exchange, what's your projection on the price of Bitcoin? Is it going to fall again like it did for the past months, and is it going to fall?
This is what I said. It's very hard to predict this. It's what is the value of Bitcoin? I mean, Is it worth as much as gold? Is it worth as much as the US dollar? Is it worth as much as the Bulgarian leva? You don't know. Depending on that, we have a different price target. But for the next few months, let's say, if you're asking me, it went down from 1200 and now it's a little bit below 600 as of today. So that's already 50% discount, 50% correction. Yeah, in a way. It's a 50% correction, and that's pretty huge. And something which is very typical for Bitcoin, there's these flash crashes. Like one day it goes down to 200, and the same day it's already back up to 600, let's say. So you don't really have enough time to buy at a lower price. So my personal feeling is that it will. There are two scenarios. Either it will have another huge spike until this end of the year, and from now it's not going to go much lower. It might get down to 500, then trade in a range for a few more months, either before or after the summer, and then spike up at least 5 to 10-fold up. Or it could wait actually until next year, because the last year's rise was so huge that it needs to stay stable for some time until a lot more interest is gathered, so that the price could be pushed up. But that's very speculative. I mean, this is my opinion, and maybe it will happen like this, maybe it will not. I feel that right now it's a good price to buy. There was this question there.
I just wanted to ask about the mining thing. Like, so you said that it's required to have some sort of, computer skills and stuff. Does it have to be like a coding? And if so, like, what are the problems that they require you to solve? Is it like some kind of, I don't know, technological issue with computers?
Well, the thing is, you cannot mine with a regular computer right now, because it's not powerful enough. There is so much computing power in the system that you need something which is way more powerful. And in order to do that, basically there are people buying microchips from China, making something like video cards and building them together, stacking them together, and making such kind of machines. There are already companies which are primarily dealing with producing final user machines for mining. And for example, the KNC miner that I showed you the wallet a few seconds ago, they produce mining machines and they sell it to the final customer. And these mining machines are created to mine Bitcoin. They cannot do anything else. So you get it, it's already with installed software inside. It's pretty much user-friendly. You plug it in, there is some Wi-Fi needed, and you start mining. But the thing is, everybody wants to mine. And it's much better to put this money into Bitcoin, and then when the price rises, you're going to earn more than you're actually going to earn from mining. Because the difficulty is going so much faster than the price. Everybody is rushing into the mining. You had a question?
How do you protect your personal wallet?
There is a way to print it. You gotta have an offline computer which you're sure that is not infected by any viruses, maybe a computer that has never been online or is in an environment which is very well protected. So there are websites, you can download the website itself and then run it on an offline machine. It will create random pairs of these red and green codes. Basically, you print them out and you put all your Bitcoins into the red one, and whenever you want to spend it, you use the green one to spend it. So you can print a few copies, you can print it, you can put it in PDF also and put it in your flash drive and spread around these in different places so that you don't lose any of them. You can also encrypt the green private key with another password so that if somebody accidentally finds it, they're not going to be able to spend it for you. They're going to need a password. So it's not very easy. It's not super easy, user-friendly, but it's possible. And there is plenty of explanations on the web. I didn't include that on the presentation because it's a little bit more advanced. There is no point. But if you want to learn it, you can do it very easily. Yeah.
One thing seemed very unclear to me. In the beginning of the presentation, Bitcoin aims to create the perfect money. And one of the qualities of the perfect money was that it has the same value today and tomorrow and the day after.
Supposedly, yes.
But Bitcoin changes in the
That's
morning,
true.
it's 200,
It's still
in the
not the perfect
afternoon
money. It's an attempt, and eventually, if it is so much better, it will replace the other money that we use, and the value will be stable. But the thing is, what determines the value of this of the Bitcoin? It is the supply of Bitcoin that we have. It is the amount of Bitcoin in circulation. So, with this system, we have a pretty predictable supply. In the beginning, 50 Bitcoins per block. So in the first 4 years, you have, let's say, 8 million created. Then in the next 4 years, you have, let's say, 4 million created. And then these are just coming off the top of my head, these numbers. But I know right now, there are 12.5 million Bitcoin. And in 10 years, there will be 20 million Bitcoin created. So, and the maximum number that there will ever be is 21 million. So it means that in 10 years, 95% of the whole supply will already be available. So that's extremely stable currency. It's like nothing else which was achieved. And this 5%, remaining 5% will be given away as rewards for publishing blocks until year 2140, when the last Bitcoin will be given as a reward. And then the people who published blocks will be rewarded only by the transaction fees. Supposedly there will be many, many transactions at the time. And they will get this reward. So at some point, the production of new Bitcoin will stop, and that will secure their value, basically. So that's the thing.
Yeah, I have a question. The Bitcoins remind me of the financial products that were traded before the financial crisis, the one that actually dragged the whole world into the financial crisis. Like derivatives, credit default swaps, they were like so complex and so fancy, and everyone was excited about them.
They have nothing in common, just that they're complex.
No, they have things in common because they bring, they have the potential to bring very quick profit, quick and large profit. And since here, all the Bitcoins, they're so fancy and exciting, and they can bring a lot of profit, as I understood. This is how it goes up.
Okay.
So is there a problem that Bitcoins might drag us into another financial crisis eventually? Is the creation of
No, the reason for the financial crisis were not actually the credit default swaps or these derivatives that you're mentioning. They were just the trigger. They were the final stage that, and they were the most vulnerable instruments. Basically, they were the ones that broke first. But they're not the cause. The real cause is the expansion of the money supply and the debt spiral that is continuing in the world. We have never had so much debt in history of the world. And there has never been a country which is, let's say, 150% of their GDP in debt and was able to actually pay it off. So the way they choose to pay it off is to devalue it by printing more money. So this is why the crisis came. Artificial low interest rates, which stimulate borrowing and speculating and creating all kind of derivatives which are based on nothing. They're based on false credit. And when somebody defaults on this credit, you lose the money on the derivative. But if you go deep and try to understand what you're buying, people were buying these derivatives like bread, and they didn't actually know what they're buying. They were packaged in such a way that you don't know what you're buying. You're buying something and you value it because it's issued by JP Morgan or Goldman Sachs.
And because it brings a lot of profit.
Supposedly brings, yeah, it has a little bit history that, but history of profit doesn't mean that it will continue. I'm not saying that Bitcoin will continue, but if it's working, it's technology. It's so much better than everything else that we have, that if it keeps on working, it will rise in value.
But there were a lot of instances when hackers were just crushing the websites where Bitcoins were traded.
That's true. No, they're crushing not the Bitcoin itself, but they're crushing the websites which are exchanging it, or are providing some kind of other service and are not secure enough. The owners were not good enough to make the security so that they protect all the Bitcoin. So that's true. It's not a perfect environment. You got to be able to take responsibility for what you have. There are risks in this way, but nobody has yet been able to crack the protocol of Bitcoin itself, and that's the good thing. And if it keeps on working, it seems that it's better, faster, and cheaper than what we actually have right now, and that's why it's going to replace it. But if it stops working, then its value will drop to zero. So it's pretty clear. It's complicated, but you could go down to the basic level of it. And there are serious differences between the derivatives and Bitcoin. Other questions?
Do you think this can work for issuing debt? For example, if I want to make a mortgage using Bitcoin, I think that I wouldn't be able to do it right now.
Because it's still not widely used. It's still not widely used. There is no bank that can give you money and lend you Bitcoin. And also it's not going to be in your interest to do it because maybe the value rises so much that you end up with huge debt.
I'm assuming that the value is already stable, so
But yes, but it's not. And also, actually there are websites which are trying to do this service of lending Bitcoin, but it's still not working well because it's a speculation. It's the desire of people that this system will keep on working and it's going to survive. But would it survive within the next 5-10 years? We don't know. But if it survives, it's so much better that it's going to replace the old one and the price will rise. So you have no incentive to actually borrow it because you might end up giving back a lot of value. And right now, it's still too early for that. We're in a very early stage, very early. Any other questions?
Are you familiar with dog coins?
Which one?
Dog coins?
Yeah.
Or Doge? Yeah.
Yeah, something like Dogecoin or whatever.
Overgrow Bitcoins?
No. It's a complete joke. It's a marketing trick and somehow network effect. It got popular very quickly because of the absurdity of it.
Yeah,
It's interesting. It's a social phenomenon. Yeah. So it has nothing. It's not better in any ways than Bitcoin.
Up the third or fourth place?
It's on. Yeah, something like this. Third, fourth.
3 months.
But for a few, yeah, it started a few months ago, like 2-3 months, something like this. Yeah, and it just how to say? Some things become popular and you don't know why. It's just a network effect. It's absurd. They sponsored the Jamaican bobsleigh team to go to the Olympics. I mean, and that's a lot of PR, and everybody hears about them, and a lot of people receive tips in Dogecoin actually, and they trade with it, they do something with it. So there is a huge marketing in this whole thing, but it's not better. It's not different. So it's not going to continue. The price is falling for a long time. It's not better than Litecoin. It's not better than the other coins. It has no additional feature. Just the joke about it.
Is the mining easier? Do you need less computing power?
Compared to Bitcoin, yes. Compared to Bitcoin, yes. Actually, a lot of people are right now because Bitcoin mining is so difficult. You need a lot of microchips which are not available. You need to be a really hardcore hardware guy to be able to build these machines. A lot of people are mining alternative coins just with video cards. They're connecting in one computer 5, 10, or whatever is possible video cards and connecting them to the networks. And they might be even choosing different currency every day depending on how the difficulty is going. And a lot of people are actually doing it from dorms like this one because they're not paying for electricity. And
I think that they called a student in Harvard who's using their supercomputer to make Dogecoins.
Maybe.
Yeah.
Okay, thank you very much for listening. I hope it was useful in a way.
This program is brought to you by AUBG Talks. For more, please visit us at aubg.edu/talks.